In this particular company, in the case of Rain, you just can't show up in New York and say, hey, give me $1 billion. But he was able to convince the bankers to give him the money. If it works, they have upside. If it doesn't work, they have no downside. The CEO agrees to meet me. And when he agrees to meet me, I could see he's really not interested to meet. He wants to just be in his plant, running his plant. The whole city of Mumbai, in the next maybe 30 or 40 years, will get torn down and rebuilt. That tear down and rebuild, there are only 8 or 9 players left in the whole city.
How did you predict the future growth of rail industry? Because in the past, it didn't grow as much.
In this particular company, in the case of Rain, the company had taken some very bold steps. They took a very bold step in 2000, I think in 2008, when they bought one business in the United States. They borrowed about $1 billion, and they bought a business in the United States. And what they did was, at that time, they borrowed high-yield debt, which means they were paying about 11 or 12% interest. But non-recourse means if it didn't work, they had no liability. So they bought this business for $1 billion without putting any money from their side. The entire $1 billion came from the bond issue. So which means that if it works, they have upside. If it doesn't work, they have no downside. Okay? That $1 billion purchase was 5 times the size of their business in India, 5 times. So it's a very significant event. And because they have so much interest payment going on, earnings are not really coming through on that because it's paying on the interest. But you could see that they took that deal was a good deal. Then about 3 years later, he bought a second business in Europe. And again, same thing. He borrowed $700 million for the second one. But he did something smart. He put all the debt on the first business he bought. So if things didn't work, the second business, he would just own it. He would still own it. So for an Indian company in India to convince Merrill Lynch, Goldman Sachs, etc., to underwrite a bond issue of this type is not easy. You know, you just can't show up in New York and say, hey, give me $1 billion. But he was able to convince the bankers to give him the money, which means borrowing money is much harder than borrowing equity. It's a lot more stringent. So the first data point was that he was actually able to convince the bankers, and they were actually able to raise the capital and buy the companies. So there are 2 ways to look at the history of the business. You can look at the stock chart. That's one history. The other is look at the actual record, what is going on in the company. And what had happened was the 2 businesses were very good, but in 2015, the industry was going through a downturn, and so their earnings were very, very slim. And I could see that there's cyclicality in that business. It goes up and down. But we were at a low point in that cyclicality. It was hard to see that we would go below that. So I said, okay, even at the low point, they're still making money, they're still okay. If it changes a lot. So what happened in the next 3 years, from 2015 to 2018, is their earnings increased. And what they did was they took the 11% debt, refinanced it. Now the interest rate is 5.5%. So they took the debt interest rate, they cut it in half. And non-recourse. And what I noticed is that every time the company will do some project, some capital project, they always execute really well. It all comes in on time, they're doing well. So initially when I bought the business in 2015, I just thought this is a cheap business, I'll make 5 times my money, and I'll sell and go. I thought, okay, buy in 2015, but 2018, 2019, make 5 times your money, sell it and go on. That was my thought. Then as I understood, so one thing to remember about investing, you will only learn the business after you own it. You will not know the business when you analyze it. When you become an owner, that's when you, so from 2015 onwards, I really started to understand the business. And the CEO of this business, he does not want to meet investors. He doesn't meet investors. He just wants to run a business. So after, I think in 2017, I approached the company for the first time to meet them. The CFO said, I'll meet you. The CEO, he's not interested. So I met the CFO. That gave me some information about the business. Then I told the CFO, I'm coming again to Hyderabad. Can you ask Jagan if he will meet me? So now they knew that I had held the stock for 3 years, and I have not touched even one share. It's just sitting there. That position is sitting for 3 years. So the CEO agrees to meet me, okay? And when he agrees to meet me, I could see he's really not interested to meet. He wants to just be in his plant, running his plant. But in that meeting, I think we have some connection. We make some connection. So then January of this year, I told them I'm coming again. He was excited to meet me. Okay, so now I said, okay, good. Now we can actually meet sometimes. And I was finally able to get into how his brain works. And with Rain, I understood that Jagan is a very good capital allocator. He understands capital allocation really well. He's going to be very careful where he puts his bets. And he's architecting the business to become better and better. So I said, okay, this looks good. And I think for the market to understand all this, because he doesn't talk to them, it may take 5 years. It may take them a long time. It's fine, but we think of ourselves as owners of the business. You know, we own 1/10 of that business, and I think of myself as an owner. I want to own that business for 10 years, 15 years. I just want to own that business. Sunteck, I want to own that for 10, 15 years. The other thing that's happening in Mumbai with Sunteck Realty, which I forgot to say, is that the whole city of Mumbai, in the next maybe 30 or 40 years, will get torn down and rebuilt. Because the land is very valuable and all the buildings are very 2-3 story. So all of those will go away and become big towers like China, right? And so that tear down and rebuild, there are only 8 or 9 players left in the whole city. So Mumbai is expected to become one of the most densely populated cities in the world in 50 years. It'll have about like 60 million people. And that whole housing of 60 million will get torn down and rebuilt by 10 companies. Okay, Sunteck is one of those 10 companies. So you just have to sit. We just have to sit for a while and just watch the show. And when they tear down and rebuild, that business is really good because you keep selling the apartments before the tower is up. You know, people are putting deposits as the tower's coming up. So it's a really good business from that perspective. So anyway, so the bottom line is that these were what I would call special situations where the business was there, it was good, but there was kind of a cloud on it. So most people will not invest in businesses like that because they just can't see it. But I think our job as investors is to peel the onion. Peel the onion, and the most exciting ones are ones where you find a great moat, but no one else can see it. Yet, you invest before people can see it.